Thank you. Hello, Andy.
Hello, Steve.
All right, it appears we hear each other. It appears people see the screen, so let's get started. All right, welcome everybody, traders, investors, to the Trade of the Week, June 19th. Every Tuesday, we show up here at 5 p.m. Eastern to talk about a few things. As you know, we always start off talking about disclaimers. So as you know, we're a software as a subscription company. We're not registered investment advisors. So if we talk about things or stock prices or opinions, and none of this should be taken as investment advice. If you need a strict investment advice curtailed to your family's needs, well, you got to go to the people who have the right designations, RIAs and brokers alike. So please don't construe anything you see or hear today as investment advice, because it's not. All right, always starting with this slide as well, just a reminder of the amount of time that we open up to newer users. Now, this is a 14, 15-year-old program now, and there are many, many levels and depths to this great program. And the learning curve is there, and we recognize that. So using the afternoon webinars like we're doing now is a way in which we stay in touch with you all and take questions. Friday support sessions, you'll notice at the bottom of the slide, from 11 to 2 p.m. Eastern, we basically open up the floor to you. There's no prepared content. The flow of the session goes with whatever you guys want to talk about. How do I build this? Can I do this? Can I do that? And it's very informative, and so we continue to do it every Friday for 3 hours unless the participation wanes. Now, we got rid of our one-on-one sessions. We just no longer could support them, and it really wasn't fair to ask people to wait 6 to 8 weeks before they were able to get to one of us. So we moved to a more efficient use of time, which is the Trade Ideas University. It's a 4-part series. It resets and starts over every Monday and finishes up on Thursday with some advanced stuff. And those are always 12 to 1:30 p.m. Eastern time. Again, Monday's kind of basic, and then we get more advanced as we hit Thursday. And the next week, we start over again. So everybody is available to attend and get education that way. Another great way in which we're opening the doors for people who need immediate assistance. And then lastly, of course, this week Barry is on vacation. For some of you that may have pointed that out to me, I'm aware of that. But our Trade Ideas live trading room is kind of eating the lunch of other trading rooms out there because it's free. And free is always a good price. And Barry is an excellent moderator. I think he was probably put on this earth to be a patient moderator of this room while trading his account and doing all the other things he does behind the scenes. But it's a great place to pull up a chair if you're not a user of Trade Ideas yet and kind of get a feel for how it's used. And there's great traders in there additionally, a handful of good guys that and girls that know what they're doing and kind of call out some good trades as well. So there's tons of value. There's a lot of value in that room, especially, like I said, when you consider it's free. So because of all this, many, many hours each week, we're making ourselves available to you guys. Here's just a little more of a breakdown on the Trade Ideas University, 4 different classes. And of course, we have archived these. They're on our Trade Ideas YouTube page, YouTube channel. All you got to do is find the YouTube channel for Trade Ideas, locate the playlist, and you'll see one called TI University. And there's 4 days, 4 videos. You can jump in there right after this webinar and start watching because we have archived them. But this is a slide that kind of gives you an idea of what that's all about. And because of all that, this quarterly graph here shows that with the advance of AI and just more rubber hitting the road and more traction of our great product getting into the industry, wonderful subscriber growth. So thank you all for doing that. But the slides I just went over, I think, are a pretty good reason why we have a pretty good subscriber growth and retention. We do our best to try and help people. All right, here we go. The theme for my webinars are always the same: man and machine combined. It's a great Paul Tudor Jones quote. No man is better than a machine, and no machine is better than a human with a machine. Thank you for that edit, Rudy. So what we're talking about is our technology of Trade Ideas being the technology platform and us as humans interacting with that. And that's really how AI is designed to be used. If some of you are not familiar with the IBM Watson study and how they taught Watson to read oncology medical journals and then come back after a couple months of analyzing DNA strands, where we're over here analyzing trade strategies, but Watson was analyzing DNA strands and then reporting back to the oncologists, giving them a nice curated short list of treatment ideas unique to each patient. And if you read that study in that article, you'll see that the oncology head of that department and the doctors alike, they were all pretty blown away, and they got the whole concept of man and machine working together. And so that's what we're trying to do with Trade Ideas. Agenda for today, the 19th of June, looks like I got the date right. We'll go over the market recap, a couple of observations of interest to talk about. I'll remind people that we do have a new channel bar that everybody can tap into. You don't have to have a new version to do so, but I'll repeat that again this week. I think Andy's got some good prepared stuff for the Holly AI recap. Interesting day today. And I see your question, Tony, your comment. I'll touch on that when we get to that point regarding the 3 different iterations of the AI, what it is now and what's to come. So hang out there if you would, Tony. And then trade of the week, and that's what this webinar is basically hinged around. The theme is the trade of the week. This week was Angie's List, or homeadvisor.com, for those who didn't realize that. We'll look at the genesis of it and how we selected it, how it's doing, and where it might go from here. And then it kind of came to me as trying to round out some of the content today, in the support department of Trade Ideas, a very common question comes in a lot. And that question is, hey, I've got this alert that's supposed to look for stocks gapping up, and my stock XYZ didn't show up on there. Why? And so I'm going to try and maybe cut a couple of those off and before they come in, and show you guys how you can do what we do when those questions come in, to kind of show you, well, this is the reason why it didn't trigger. So a little bit of insight when we get to that point, and then time permitting, maybe a couple of chart requests. Andy and I will take a look, but if you have a chart request, please hold on to that until we get to that point and ask for it. All right, so let's dig into the content today. Again, the question box is open. Try and keep it in context if you can. We're not supporting any brokerage plus or auto trading stuff in these afternoon webinars. That's more for the live chat or info@trade-ideas. So as said, we'll go for a market recap, and I will always start with the S&P 500 using the SPY as the proxy. And one of the funniest things to note is, Andy, what are you noticing here? Any
Market going down in green candles.
Yeah, isn't that funny? That's not supposed to be how it works, but when you have a market that gaps down and trades up and gaps down and trades up and gaps down and trades up over and over, you're going to get green candles. But in the end, it doesn't really matter, because we got the pullback that we were looking for and saying was desperately needed. Long stretch of 2 weeks back here, price action. It didn't give us much consolidation to pull back or even sideways action, but we did get it the last few days with gap downs and trading back up. Well, where does that put us? Well, it puts us right back smack in the lines that I have been drawing, the pivot lines from before. These 2 levels of resistance we broke through probably 2 weeks ago. And I said, we could either go sideways and consolidate over time, or we could go to the more, what's the word I'm looking for? The less stronger of the 2 consolidations is when we pull back in price, which is what we have apparently done. We have apparently pulled back in price, and it doesn't matter if the candles are green or red, it still happened because the low of today came down and broke below the pivot line, and then the buyers came in and full force for the rest of the day. This is kind of textbook, it's all about where the price action closes. It's not about where it traded during the day. The closing price is really what matters in this market. So yes, good 3-day pullback, made perfect sense to bounce here. I've gone over so many textbook examples of pivot lines where prior resistance becomes current or future support, and that's kind of what we have going on here in the S&P. I fully expect, barring any crazy news out there that none of us can see coming, technically it looks like it's trying to build a trend, higher lows, building a higher base camp right here where we would expect it to. So now that we got the pullback that I was saying the market really needed, if you recall last week I used the word breathe, price action has to breathe. If If you're going to be the guy or the girl who buys the eighth green candle on the daily chart in a row because you think it feels safe, well, be prepared for the inevitable pullback because you're going to be a part of it. So we got the inevitable pullback the market needed, and let's see if we can build on this. And then, of course, we want to make an assault on this orange line up here, which is the second lowest high in recent months in our SPY. That is the S&P. No harm, no foul, kind of just normal price action. Now, if we go to the Qs, we have known that the technology has been driving this market higher, and we have noticed that the relative strength is the word I'm looking for, has been showing up in the NASDAQ and the Russell 2000. So a bit of a different story here. There wasn't really any reason for the level that it found other than it did pull back, a few days, broke through that prior resistance. And I think if we look close enough, we might just be a dime or a nickel or two above that pivot line. Let's get the numbers. 175.93, 175, so we'll call it 175.90. What's the closing price today? 176.04. So by 15 cents, we actually climbed back above the pivot line that the NASDAQ had put in place back here with these two candles. Interesting. The IWM, Russell 2000, doesn't look anything like the Dow or the S&P. This thing is just driving the short sellers nuts. If you're short selling small cap stocks right now, please be careful, because short sellers are getting squeezed left and right, as we will discuss in the Trade of the Week segment, because that was part of the methodology. But this is showing just tremendous strength. Again, this is a great example of what I mentioned earlier, pullback. We can pull back in price for consolidation, or we can go sideways, and the sideways consolidation is the strongest of the two corrections or breathers, if you want to do it. So actually a little wick on top of there. We made a new high today in the Russell 2000. So anybody who's trying to short the Russell 2000, I got news for them. Nobody, and I mean nobody, is in the money trying to go short this thing. So Russell 2000 small cap stocks definitely trying to lead us higher. And don't be surprised. Every now and then, guys, sometimes we get these days in the market where the junk stocks, they just start taking off. And what I mean by junk stocks are stocks that are typically priced under $5 and have been pretty relatively quiet. But all of a sudden, you get this feeding frenzy of what can I jump into next and hope it's going to be jumping off the charts. I haven't seen that yet, but if I do see it, I'll talk about it in the webinar. But there are days that we've seen over the many years, Andy and I have been traders, where sometimes just every little junk stock just becomes really attractive. And what I'm saying is the IWM Russell 2000 is starting to set up for a possible one of those types of days, because that sideways action was super strong. It just basically waited for my 10-period moving average to continue to push the price higher, which it seemed to do. And then bringing up the rear is the Dow, the lowly Dow. For whatever reason, the components in there are just not as strong as the other ETFs, but we can kind of look at it and say it's trying to do the same thing the spiders were doing. 3 down days with green candles, same thing there, but nonetheless a nice pullback. This low is higher than this low, which is higher than this low, so maybe the Dow is also trying to build a trend moving higher. And then, of course, this orange line is showing up just above the recent last week highs. That's going to be where the sellers try to jump back in, but it's going to take a few days to get back up to there if we can.
That chart looks nothing like the other ones, though, right?
No, it's got your old Dow components in there, some industrials, some financials, and whatnot. So it is what it is. Definitely not small cap land. That's where the happy joys are right now in small cap land. EWI, I had mentioned Italy was something that people were keeping an eye on. Well, big gap down this morning, but traded back up, so also down, but with a green candle. We need to keep an eye on some of these European banks. Deutsche Bank was trying really hard to do what it can to keep this support level pretty much intact. Today, it had a nice bounce. We'll see what happens. And then Credit Suisse is another European bank I'm showing you. I'm showing you what the market is worried about, even if I shouldn't even use the word worry. When we look at charts like this, the market's not worried about anything at the moment. But what could the market start to worry about? Well, there was a hint of some crisis in the banking in Europe, and the chart is definitely showing us some not good stuff going on over there and the footprints in the sand. So I think, just keep an eye on some of the big players in Europe to make sure these guys are not breaking down, because if they do, that could very well translate into our markets. And we don't know how to handicap black swans or things that basically come out of the blue. All right. Okay. Hey, very good, Joanne. I'm glad you were able to get in. I know you were having some trouble yesterday, but looks like you got Gmail to regurgitate the correct link for you. Very good. Another quick comment here. Does the Y in SPY stand for Yahoo? No. All right, so very good. That is the market recap, unless Andy has something he wants to add. I will end by saying I am not concerned in the slightest. The bulls seem to have full control of this market again. But anything you want to add, Mr. Lindloff?
No. I think you're correct. Is seeing these gap downs and then buy it back. Obviously, China and Europe was down pretty big this morning when we opened up, but it seems that not to phase our market as much, and we come roaring back each day. So
yeah.
Yeah.
Last night there was some more news. The trade war type news seems to drag the futures down at night, and then the regular session they just say, oh well, shrug and buy the stocks back. That seems to be what's been kind of happening lately.
Yeah. Now it's definitely predominant in the tech sector and also the small cap. I'm still not seeing the crazy, euphoric action in the spiders, and it's probably because a lot of the banks are holding it back. XLF still not doing.
Tony asked, how long do you think the IWN will run up before taking a breather? Well, I expected a breather like we got in the other three indexes, ETFs, but look at the sideways is the most that the IWN was willing to give up, and that is extremely bullish. Now we're pushing higher. So when we could have a few more days of higher pushing, but when it comes back to pullbacks, the first line here is the SMA 10 period. That's going to be the momentum line, the guiding hand that guides momentum. If we do have a break in the ice and we do get a pullback, well, the next line of support would be the red 20-day moving average, or more than likely that pivot line that we had defined here. It could come back and revisit that pivot line, and it could do it in one day. It could wipe out all these in one fell swoop, because fear is a stronger emotion than greed, always. But good question. I don't know when. I just know it could, and where it
you might want to look for a close below that 10, maybe a good gauge, a little warning sign, because it hasn't closed really below it, and we got close there on one day, but other than that, basically 2 months been above it. So
exactly. So a close below the 10 period would be the red flag. Might be what you're looking for, and then from there, maybe the 20-day would be the line there and the Russell. But boy, anatomy of a strong sector right there, the small caps, most definitely. All right, where to next? We're going to go, okay, real quick, guys, before we get into Holly, there is some, maybe you haven't seen it yet, but there are 3 buckets now of different Holly trades. And even if you see the same strategy in one bucket and the other, it's a different configuration under the surface. I can promise you that. It's not going to be the exact same configuration. But for the most part, there are 3 different buckets. This was just dropped on us last week. I highly recommend, if you're looking for a lot more color on what the differences are between Holly Neo, Holly 2.0, and Holly Grail, the original. Tomorrow at 2 p.m. Eastern, you're going to have the Q&A webinar, hopefully, with the CEO Dan Merkin, and he'll have a lot more definitions to kind of give. I mean, one of the things I have heard is that the Holly Neo, the 3rd iteration here of the AI, is a bit more volatile, a bit more aggressive, a bit more liberal in the stops, doesn't get out as quick, lets things work a little longer. So I guess the word might be volatile. You're just going to have to sit through a little bit more volatility the way that one's programmed. But what I'm doing is showing you here this channel bar. All right. We now have a new P&L window. You can see 3 green P&L windows for each Holly segment, and we'll get into those in a moment when Andy starts talking. But what I wanted to do is, there's a couple ways. If you don't have this currently, you can either outstretch to get the white, because this is basically a browser window, and in the white area, click refresh, and that should bring in these 3 new windows if you don't currently have that. The other easier way would just be to close the window using the red X, and then go back into new channel bar. And the new channel bar should be there for everybody, where you can see just a quick thumbnail of what the, whether it's green, positive, or whether it's red, negative. We'll give you kind of a quick thumbnail. Now, to come back to your original comment, Tony, this is just the beginning, the skeleton of where we're going with this. We recognize, and Andy's going to show you also how we can right click and look at the different segments individually, but that's not easy. That's not efficient use. It's not a great user interface, and we recognize that. So what will be eventually coming, and I think will help you and others who say the same thing, that it's kind of hard to toggle back and forth between the three buckets. There will be a dashboard of some sort that will give us all the information that we pretty much want on a single dashboard, and that's coming. I just don't know when, so we will see. By the way, John just emailed Holly today, Excel screenshot from the 3 Hollies to the email. Okay, somebody will take care of that email for you, John, if you had a question. And now, so I guess after talking about, this new channel bar, if you weren't aware, there's, like I said, an easy way to peek in to see which ones maybe got the higher values. And then if you want to go and look at them individually, you right click into the main window and you can select the 3 different versions here. Judging by the surface look, it looks like all 3 had a pretty good green day, and I think Andy might have some insight he wants to talk about on AI. So do you want to use my screen, or you want to use your screen?
I'll just go ahead and take it for a bit, makes it easier. So
okay.
I'll just take it. All right.
Gotcha.
And also, guys, another feature coming to a version near you that Steve, I don't think has downloaded, is now you can see on my channel bar, I have default layout on.
Is that thing active, or is it just a placeholder, Andy?
Well, I'm on my default layout. I guess I could change it and see what happens. Let's see. Let's go to symbols. Yeah, it's active. So my default layout's right there, so it tells me it's not on. So let me load my layout again. Default layout. And on. It's about to come on.
We're actually learning how to use this in real time, guys.
Well, I just downloaded this this morning. Now it was on just a minute ago. I'm not sure why it's not saying on now, but
what did you click on it? Did you click on it?
Ah, there it is. So now this is sweet. Now you don't have to go back to your server. All right, your hard drive. In other words, you don't have to go to File anymore and load layout. You can just click on your default layout here, and it's going to pull it up for you.
Andy shouldn't use the word now. It's a rather teaser word. This is a developer's version. It's just came out this morning. So we have to play with it and kick it and try and break it a few times before it becomes a downloadable beta version. But I know a lot of you guys have been asking for this for a while. So there is a good example of ask and you shall receive. Eventually, the priorities team gets around to building what people are asking for. So give us a couple weeks to play with it and try and break it, and then it should be in one of the newer beta versions coming out soon. So all right, cool. All right,
that's why I prefaced it with coming to a version near you. So it's gonna, it'll take some time. So all right, guys, I have to say this is probably one of the most impressive days I've seen in Holly, maybe of all times. And you asked me why, is because we were up, I believe, I'll double check it, we were up on risk off, up on risk on in all 3 segments, and I don't think there was a stop hit today in all 3 segments, and there was a limited number of trades. I'm always impressed, when you can get a really good P&L with only a handful of trades versus having, 30 trades. It's just, I don't know how you feel about that, Steve, but this was, I thought this was an incredible day. So let's break it down. Okay, this is the Holly Grail, the one you see at top there. You can see here the risk on P&L on the channel bar was up 571, coinciding with what, although it's 575 on here, I'm not sure why that glitches there. Holly 2.0 was up 2.8, and Holly Neo was up 4.51. So some of you guys in here that may be kicking the tire, you say, well, what exactly does that mean? Well, basically, if you bought one share of every alert that came down here, that is what you would be up. So in Holly Neo, if you went risk on, you stayed in these trades, and you bought one share, you'd be at $5.71. So then all you have to do is start adding zeros when you multiply your shares. So if you happen to play 1,000 shares, you would be up $571. So that's how that works. Let's go over a few trades here. Now, I will say this, 3 of the trades in Holly Neo, the 3 shorts here also appeared in this is Holly Grail. These 3 shorts also appeared in Holly Neo. There's different configurations here, so it's possible, and it happens all the time, that you will get a trade here, but the parameters won't meet the ones in maybe one of the other segments that's running the same strategy, and you won't see it in there. So let me give you an example. This IQ, right? Let me see which one. No, this PAGS, P-A-G-S. You can see in this one it was short, but it was short at a different time. Look at this 1133. We can pull it up here. And this was shorted later in the day. Really didn't work out. She got off on risk off for a small loser. Risk on would have been 55 cents, but I'm not sure if anybody could sit through that. That was a kind of a pretty decent move higher there. But let's take a look at Holly Neo real quick. All right, this was Holly Neo. Risk on 464, risk off up 204. Risk off not bad either, you know. But let's take a look at PAGS here. PAGS. Look at this time, 9:28. Now I'm on Central Time, but you can see this went off 3 hours earlier than it went off, and there it is right there. A beautiful trade. I remember telling the guys in our Slack chat that I said, wow, I'm liking the way this is set up. You know, it had a gap down below, you know, resistance on a 4-month low, and it was just kind of bleeding down, and there's the call by Holly, and then a nice break there. Risk off, she made 85 cents on this one. IQ was also on both of these, and I think these were the same. So let's take a look at this IQ. This is a beautiful fade of a strong stock. Now, Holly, a lot of times when you see this fade, it's some sort of selling strength or some sort of fading strategy, but this is actually a downward dog momentum strategy. And what you had here was a stock that's just been, you know, incredibly strong on the daily chart that broke out today, and then look at this, broke out, came immediately back, got near lows, and then tried to bounce up. It got about the halfway point, and then started going sideways, and that's where Holly picked it off right there on downward dog. Very, very little pain, maybe 10 cents or something like that, and just rode this out, and then beautiful break there. Very nice trade there. 20 cents on the profit save, but if you held this, you know, this is why we say, guys, you know, man with machine. Holly gets on a profit save because she doesn't want her winner to turn into a loser. Maybe you knock off half your trade and hold the other half, and, you know, look at all the extra alpha you had in that thing. And the big winner also,
WVE.
WVE. What a beautiful that one was. Let's take a look at this.
You know, the one that I liked about this is that even though I looked at that chart and said, wow, that's already had its move, the AI said, no, there might be more behind it.
And boy, was there. Here's the 15-minute chart. Let me zoom in a little bit. You can see opening up and then just really getting destroyed early. Put in a couple of bottoming wicks, tried to bounce, and this is where Holly picked it off and noticed that, hey, not much of a bounce there, and now this thing is starting to trend sideways, not too far from, you know, well, I guess if you use that wick right there, it's far from lows, but nonetheless, it was not showing any more strength after that little effort right there. Holly picked it off right here, and also the same thing happened in Holly Grail. I'm in Holly Neo now. Beautiful trade, very little pain, and then wow, what a massive break. All the way down to 37.32. So you really had a lot of extra meat on that bone. This is right here is the closing price, which it bounced back. what, $3. So wow, at one time this risk on would have been really in the money. But wow, look at this. I mean, you really had, you know, no stop hits, very few trades. Let's quickly take a look at the other segment that we haven't looked at, Holly 2.0. And wow, look at all these timed exits. Just timed exit, and then you finally had a reduced risk, tried to short at the close, or no, not really near the close, but tried to short there. That one didn't work out, but still, risk off 180, that's very good, and risk on 273. So some really good trades. And also I want to add, guys, this is what we refer to as directional bias. At 9:53, trust me, on the other segments
Central time.
Yeah, Central Time. Yeah, and trust me, the other segments weren't spitting out any shorts. This was probably 30 minutes after the last short had fired from any segment. And then all of a sudden you had 6, 1, 2, 3, 4, 5, and at 10:01, you had 6 longs go off in an 8-minute time frame. That's what you call directional bias at 9:53. So let's take a look at the spiders. And let's go to a 5-minute chart so we can see it clearer. And let's take a look at 9:53. There we have 9:40. So right in this bar right here, guys, is where Holly fired off all those longs. And subsequently, you can see what happened in the market. Went higher, did pull back some, but a nice little move right there over an hour or say 45-minute time frame. And of course, all these trades got off. Just you can see performed very well. So this is the kind of knowledge that you can gather from or garner from Holly when she comes to the ball game, you know, equipped with kind of an equal number of shorts and longs. All right, and then all of a sudden you see a bunch of longs fire up in a row. And Steve has mentioned this several times before. We keep a close eye on the market, because more times than not, a lot more times than not, you get some follow through in the market, because this is what's setting up, okay? And it's doing it rapidly. So maybe you weren't even in any of Holly's trades, and then all of a sudden you're like, okay, wait a minute, but I'm in these other longs over here. I got a good feeling this market's going to move because Holly just fired off six longs in a row.
Or what if you're sitting short some of your own stock that's not even on the board here, and you're like, oh gosh, what are we doing here? Oh my God, Holly just got long 8 things in a period of a few minutes. I should use that as a decision-making process to maybe get out of my short sell because the market is looking like it might want to bounce here.
Yep, absolutely. And real quickly, guys, let's just go through. You can see the Holly 2.0 had 8 trades, and nice P&L there. Holly Grail only had 4 trades. That's beautiful. And then Holly Neo, I think, had a handful. Let's see, 8 trades. So
wow, that really is a good day, no matter how you slice it.
To me, that was just. And hopefully, you guys, some of you guys out there benefited from it, and because. You know, in the market, we did have a nice little gap down, and the market bounced back nicely. That's, you know, when you're seeing action like this, you know, set up versus the days where we get a lot of, like right up here, we're getting a lot of whipsaw back and forth. That's hard for any algorithm, any trader. So I thought I was just very, very impressed with today's action in Holly.
Do.
All right, Steve, I think that probably wraps up
sure.
Holly
I'll take it back. And back to my screen here. Voila. All right. Okay, so what's next? Trade of the week. Okay, so some of you might recall, not last week, but the week before, we had one off of my Squeeze Me scan called Shake Shack. And checking in with Shake Shack, we're doing pretty good. 60-60 was the entry. We're now at 68. I mean, this is about a 12-13% run. And I just want to remind you guys, when Andy and I were running money in the Ditto Trade mirrored account, people's actual trades were attached to our trades. When we got up 10%, we started getting nervous and got to take profits, got to ring that bell. So I just want to kind of, you know, mention that to you. Once the stock starts moving in your direction and you start getting into double-digit percentage, lighten up here and there, take profits here and there. What is the PF? You mean the profit target? I don't know.
Profit factor.
Profit factor.
Mm-hmm.
Don't know what the profit factor of Shake Shack is on.
She may have been
profit
referring
factor
to,
on
yeah.
Holly.
Mm-hmm.
Profit factor is basically 1.0 would be like flipping a coin, Marguerite. You're just not going anywhere. But at 2.0, the winners are starting to outstrip the losers by a factor of 2 to 1. So
Right.
2.0, 3.0, those are kind of profit factors we do want to see. Otherwise, you're just going to stand in the same place flipping a coin at 50% win percentage with profit factor of 1.0. Winners are out are at the same level as the losers are. So we got to get above 2.0 to start getting healthy about things. But back to Shack, you know, it's performing really well. Hopefully you guys maybe taken a little bit of profits along the way as it's going, but the reason I went to this week's trade of the week, ANGI, was because Shack was doing so well. And Shack, again, was found on my Squeeze Me scan. And on the Squeeze Me scan, we're basically looking for stubborn traders who don't want to cover and buy back their shorts. Just like I said earlier about the market, here's Shake Shack. It's still on the Squeeze Me because the short float's 37%, and it's at an all-time, it's not an all-time high, it's a 52-week high today. I can pretty much guarantee that nobody is in the money on the short side. And with all these people still short, the only way they can get out is buy to cover, and that becomes the old flywheel of moving higher of short covering. You know, short covering begets more short covering, and it just becomes a momentum. So with that knowledge, we went to the well again in Squeeze Me again this week, and we found Angie. Now, I don't think Angie is going to be on here at the moment because it's not close to highs, but let's take a look at what happened yesterday. Coming into the day, it looked very much, I'm going to go back to Shack real quick. When we picked Shack, it had already broken through, and I said the second mouse got the cheese. It pulled back to the pivot line. There's, again, a great example of the pivot line, guys. Selling resistance, broke through, only took a day and a half to come back and test it. It was, in fact, support. And once it broke that candle to the upside, the trigger was on. And so short squeezes at 52-week highs are working. Well, ANGI was on the short squeeze list on Friday, moving sideways, 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 and this nice green candle right there was just itching. And look, the 10-period moving average never closed below, constantly put a nice close back above the 10-period moving average. And so it was just settling just too perfectly. I couldn't ignore it. I'll be honest with you. I was also looking at SeaWorld, same type of a setup, big short float in SeaWorld. I probably could have mentioned it, but I didn't want to get too distracted. But again, same thought, idea, high short float, 52-week highs, sideways action, as I talked about at the beginning of the session, how sideways action is more stronger than pulling back in price. Well, ANGI, which is Home Advisor, basically was going sideways, and then when it triggered yesterday, of course, I was there with my screen capture. There was the intraday trigger, and it was doing exactly what we want, right? Maybe not so much in the relative volume, I'll give you that, but in the moment, as it was blasting through, 790% of a normal 5-minute candle was doing 8 times a normal 5-minute candle. That's the kind of thing we want to see. And then today was just a lot of kind of sloppy back and forth, but again, we closed back above the trigger line. And I'll tell you, if the spiders and the S&P do what we think it's going to do and dig in after and start moving higher, making higher lows in the market, no reason why a stock like Angie should freak out the short sellers, because not too many short sellers are in the money. Maybe somebody shorted up here yesterday. They're barely in the money. But if this thing continues to creep higher, the flywheel, the momentum of short squeezing will probably come into play here as well. And hopefully, maybe in a week or two, Angie will kind of look like Shake Shack does. But that was the idea, the genesis, the thinking. Go with what works. I think the first sentence in the email was, if it ain't broke, don't fix it. So that's what we want to do in trading. Stay with the method that works until it stops working. All right. Did Holly put the pivot line on? No, Tony, these pivot lines in orange were drawn by me, my own eyeball. Also, when we type in a symbol to the chart, you'll get these color gradients here, which basically means if you bought ANGI right here, your downside is going to be the edge of this color, suggested stop, and the upside is going to be even higher, way up here past yesterday's high. So we give you a color band. These are not the Holly trades. It doesn't matter what you type in. You're going to get the same you're going to get the same color bands, as opposed to when we click into the Holly trades, we have red and green giving us the suggested stop and the suggested profit target, etc. So I think that's what you meant in terms of that pivot line. So the trade of the week, ANGI, again, hopefully no reason to be concerned here. Look at all the attempts to break that 10-period moving average, which is fanned out above the 10 above the 20 and the 20 above the 50. That's always a good sign, even more so on that SeaWorld stock. I mean, really nicely fanned out. But we didn't select SeaWorld, we selected ANGI. And hopefully we'll get some nice move higher. If this thing continues to go in the right direction, maybe sell a quarter, sell a third along the way. It's a lot more fun to do. Can you cover swing stops if you get time? I don't get why they're so far outside the money. Well, unless I call another swing stop manually, the Trade Ideas swing stop is going to have a pretty good amount of downside to it. So, the idea for swing trading is allowing the price action to throw a lot of elbows. And this is just the logic that they have come up with. It's definitely very liberal on the charts. It doesn't always necessarily mean that if you're a more aggressive trader and you want to have more share size, well, maybe you'd have 500 shares and you might use that as a swing stop. But if you're giving ample room for movement and you've only got 250 shares, well, then you can afford, more price action down to the swing levels. They are definitely sometimes more wider than others, but there's some sort of a technical reason that I'm not really privy to or know much about. But the Trade Ideas secret sauce is in there suggesting those swing stops. And yes, sometimes they might be pretty liberal, but you just can adjust your share size accordingly when it comes to that. All right, so that's it for the trade of the week. 2 out of the last 3 weeks we're going with possible swing squeezes, short squeezes off of that squeeze me alert. And again, I'm looking for sideways action and then just waiting for a nice trigger. All right, now the next bit of content we prepared for you was something I spoke briefly in the beginning, and that was when somebody comes and says, hey, I got this filter and I got this scan and it's supposed to catch stocks that are gapping up, and why didn't it catch mine? Well, I want to maybe go over just a couple of quick tools to kind of help you maybe reverse engineer that yourself and then understand an easy way to find out maybe why some of those alerts did not show up on your scan. So let's see what I do here. First step is I'm going to go to just a new alert window. I'm going to show you something. I'm going to start from scratch. When we are looking for a history, let me actually do this the right way. I'm going to do this the right way. I happen to know that, let's see, KAR was a return on this particular event window. So if there was a lot of, I might even have a better example. Let me use something with a bit more returns in there. Yeah, something with a lot of stuff. So I'm going to highlight BABA. That just came to mind right there, BABA. Now, when I'm going back and looking through, why didn't it catch BABA? Look at all these things. Where is my stock in here? It's kind of hard for the eye to focus and see or not see BABA. So what I'm going to show you is if you go to configure, in the symbol list, there is a drop-down menu. Typically, we have it set to all symbols, meaning we're scanning the whole market. Or maybe we're looking for just a small group of ETFs or certain types of symbol lists. But notice, if you weren't aware, we have this one here called single symbol. And if I go in and type in BABA, I'm only focused on that one stock. And so here's a great tool to go back in history and see where, if, and when BABA did come through. And there it is. It's showing up. And if I go through history, today, it should be there, showing me all 4 iterations of actually when it did satisfy that filter. Did it come through yesterday? Maybe, maybe not. We just ran yesterday's filter, and guess what? It did not come through yesterday. So that's the first step in kind of using the tools for yourself to see if you can locate if the stock did or did not come through, especially in a very busy window like this. Now, the second thing is to make full use of the single stock window, because this is where all of your filters are going to come through. All of these data points are basically a filter. So if I go in here and I look at my filters, and let's grab one for an example. Okay, this is really where it always usually starts. When somebody asks me to troubleshoot why they didn't see that scan, the first place I go to is average daily volume. So in this particular case, average daily volume, our filter is set at 250,000 shares a day. So the first thing I would do is I would look over here on the single stock window and find average daily volume. Well, this is a different stock and that's a different value, but that's the first thing I want to line up. And if that lines up, okay, what about relative volume? Is relative volume set? And then there's no relative volume on this one, but some of the more common filters that you want to look at that are going to suppress a stock from coming through. One is going to be relative volume, because maybe you have stocks set for, I only want to see stocks at 1.3 relative volume, but in the moment that you expected to see your stock coming through, if it was only doing 1.2, well, then you missed that filter. Another one is volume today. Sometimes people say, I need the stock to trade at least 100,000 shares today before this filter is satisfied. So there's some good, action under the surface. I'm not new to the party. Well, that's another one that typically will suppress a symbol from not showing up in your scan. Basically, any one of these can. I'm just trying to highlight a couple of the more common ones. The more common ones are going to be average daily volume, and they're going to be relative volume, and maybe volume today. But if there's anything that you can do to try and locate why didn't my symbol come through, just go to the configure, look at all the filters, and then if you need to, add those filters onto the single stock window and compare them. And that's where you will eventually find out, oh, that's the one filter that I missed. It just was not quite in the 10-day range. It was maybe just 1 percentage point outside of the 10-day range, because we use that filter a lot. That'll be another one. But I think you guys are getting the gist here. Just use the single stock window with these data points and line them up, because this is what we do when people come in and say, I don't think your program's working. It didn't catch XYZ. I should have caught it. And we go right to this drill right here. Start looking at, we say send in your cloud links so we can see your filter sets, and then we cross-reference them against the single stock window. So that's a real easy way to find out why my symbol didn't come through. And like I said, typically it's going to be average daily volume. For instance, I got a great example, ASTC. Somebody came in today in the room. Why didn't Trade Ideas pick up ASTC? I've got this set for gaps. Okay, within 10 seconds, I went to it, and this stock averages 36,000 shares a day, and their filter was obviously not set for 36,000 shares a day, because if it was, you're going to be getting junk stocks coming through all day long. So that's one of the more common ones. Whenever you see a smaller stock under $5, it's been asleep for a while, but all of a sudden is exploding with action and volume today, 99% of the time it's going to be that average daily volume filter that kept you from seeing it. So just be aware of that. What does downward dog look like in broad terms? I think in broad terms, the best I can explain it is there's a couple different ways, Tony, that the AI has short strategies. Some of them are fading upward moves, like stop the momentum or putting on the brakes, basically shorting, like kind of like a new high, or maybe it took out yesterday's high, and that's the strategy to go in and hammer it there. Downward dog, I believe, is more of a momentum downward play. Is that what your understanding is, Andy?
It is. And Tony, you can always go to our website and get a description of each one of our strategies. Do we have a description
of that one? I'm really hoping. Yeah, we do. We should.
Yeah, we have one of that one.
Shouldn't. Let's go take a look together. So you go to Trade Ideas website. 20-day range position. Is it the price? There's two different 20-day filters. One is how wide is the 20-day range, Marguerite? And is where's the price in relation to the 20-day range? 0, 20-day low equals 0, and the 20-day high equals 100. That's called position range, and that might be what you were asking about. Okay, so if you go to the bottom of any page in our footer, under the frequently asked questions, you'll see AI strategy descriptions. Let's go in together and find downward dog. And it's going to be in red because it's a short. Downward dog, this is simply a breakdown of a channel as defined by Trade Ideas data, a short selling momentum, kind of like we thought. It wasn't fading it, it wasn't jumping in the way of a green candle, it's trying to pile on momentum. So it's a short selling momentum strategy that looks for stocks under $50, good to know. And then consult the main AI window for the strategy targets and hold time, etc. So if you're ever, I'm talking to everybody here, if you're ever wondering what a certain strategy is, go to the Trade Ideas footnote area, and just under frequently asked questions, you'll see a description of all the strategies. All right, I think we got a few minutes here, so we could look at 3 to 5 charts. If somebody was sitting on one, if you type in a symbol, we can take a look and just put another pair of eyes on it. It always helps to know if you're long or short, thinking about getting long, thinking about getting short, and it's always kind of nice to end these sessions with just looking at a couple of charts at random and seeing what you guys see and showing you what we see, etc. ENT, Tony wants to short ENT. Tony's looking for a reason to short ENT. Well, kind of going back to what we were talking about earlier, Tony, this is very strong at the moment because the moving averages are all fanned out, 10 above the 20 and the 20 above the 50. Where you might get interested in looking to short ENT is if it can actually close. It gave you a fake out here, I see that, but if it could close again below this momentum line, you might have another day or two of some correction ahead. So is it following IWM? Well, it's an under $5 stock. It's in the NASDAQ. It very well could be. I don't know if it's a component. You'd maybe do a Google search and look for components of the Russell 2000.
It's more than likely that's considered a micro cap versus a small cap.
Let's take a look. The market cap's only 246 million. That's not very big.
That's probably a micro cap.
Yeah. So I would wait for another close below that for what it's worth. I'm not familiar with the stock. I don't know what's going on with it, but I usually don't want to know. I just want to look at the footprints in the sand. And they're telling us that the volume really kicked into gear here. Something has happened where the price has doubled, more so. But I would wait for this momentum line to be breached. Again, nothing's perfect. It did breach it here. It looked like there was a good start 4 days ago, but it popped right back into play. So,
and maybe even Tony, look for a big downside volume day too. In other words, if you have a good red day and it closes below that on volume, you can see that one day where it kind of, what Steve was saying, that it kind of head faked, wasn't a whole lot of volume compared to the amount of volume it ran up on. So. A lot of times these things will, like I say, continue in motion until you do get that first big crack of the ice, and it's usually on big volume, so I'd keep an eye on that.
Sam asked a quick question: why the design decision to make them all floating windows, not have a container? Well, I wasn't around when they started building the program, but it was a Windows-based program. And if you're wondering why Apple doesn't really have a foothold in Wall Street and trading, because Wall Street was built on Windows NT network technology. So if you want to plug into the plumbing of Wall Street, it's not really that happy with Apple. But the decision was made early on to make a free floating Windows. Now, maybe make you aware of a couple things you might not know. First thing is, if you want to drag all the other windows to your other monitor, first off, make sure that in the options, in layouts, you've got this checked right here, open relative to main window. The main window is whatever window or monitor this guy is in. So if I moved him over to my second monitor and then saved my layout, the next time I use the program, all of my windows are going to open up onto the window with this toolbar in it. Also, having said that, I know when you minimize, you don't want to minimize things independently. If you want to minimize the whole program, use the toolbar, minimize, everything is down, but then obviously we don't want to maximize and restore them one at a time. That would be insanity. But if you go back to the first icon, it's the toolbar, restore the toolbar, and it pulls everything back up with it. Thirdly, if you really, really hate these windows and you can't stand them, well, we have the web version. The web version is a giant container window. It's a bit more user-friendly for people who demand to have everything in a container window. But that was a decision they made early on back in 2003 to make them free floating.
And I like free floating because you can build your windows around your other layout, your execution platform. And most people do like the free floating windows. And really, if you build a default layout, like Steve was showing you, you can easily collapse it and bring it back up, you know, and looking at his, it looks almost like a container window there. So
I've used every ounce of space. Tony, why are my window headers transparent? Because I'm a big baby and I refuse to upgrade to Microsoft Windows 10, so I'm running an older version of Windows. I refuse to do it. That's why my frames are visible. All right, I think we had one more stock, and then we'll call it a day. Somebody asked about V-Ray, long if it breaks over 200-day. John. Then we'll bring Scott in here. Well, pretty tight range at first glance. You're probably right. It doesn't seem to like that 200-day, does it? 1, 2, 3, 4, 5, 6, 7 attempts to close above. Many attempts traded above, but never a close above. So I think I would agree with you there, John. That seems to be what's going on. It's having a hard time getting back above that 200-day. If we can post a close above, then that might be more interesting as opposed to just a daily wick through and back down. The bigger picture, no, not bad. I could definitely see a case for making this kind of a recent base, but you're very observant. You are correct. That 200-day moving average, however they're programming the market making algos on this thing, they don't want to let it very much above that 200-day moving average for very long. So if it can post a close above that level, then I think you may have something there. All right. Yeah, it takes some getting used to, Sam. But if you have more questions, Sam, come on by on our Friday webinars, and we can go over some more concepts and how to maximize the windows and make the best use of the program. But I guess that's it. I appreciate your participation, everybody, today. We had a good crowd turnout, bigger than usual. Not sure why, but we'll take it. Thank you, Waleed. Thank you, Sam. Thanks, everybody. Let's bring Scott back in, and he's got some announcements for you all.
Yeah, thank you. Right. So on the way out, let's just remind everyone we do have a podcast. We released a guest one last week, and then there's other earlier episodes, of course. We've done over 60 of them with our team. The ones right before that last guest one included Brad Williams, Michael Noss, Dave Mabe, and of course Jamie Hodge, all of them usually visiting with Dan Merkin. So subscribe to Trade Ideas Podcast. Just search for Trade Ideas Podcast as a keyword in whatever app you listen to them in, and subscribe. That way you'll get the latest episode, download some of the previous ones. We'll have another one out on Friday or this weekend. And it's good stuff. It's free. It's good content. Do it. We also have an ebook out. Steve and Andy both contributed chapters. It's how to win in a post-BTFD market because it's not like it was before February. So just go to trade-ideas.com/ebook if you don't already have it. Pop in your email address. And then you get an email with a download link right to your inbox. We have a code, summertime, all caps. It's case sensitive, is good for 15% off the first month or year of Trade Ideas. Use it before the end of the month. It can also be used to upgrade, either for upgrading from standard to premium or from monthly to annual. It's great savings if you're picking up the premium annual. So that's, if you're already a subscriber and you want to do the upgrade, that's probably the way to go, but it's a great offer at any rate. Summertime, use the code before the end of the month. Thanks, everyone. If you have any questions, send us an email, info@trade-ideas.com. It goes right to our help desk software. You can reach out to Steve or Andy directly. It's Steve@TradeIdeas or Andy@TradeIdeas. There's a hyphen in there. Steve is @TodayTrader on Twitter. We also have @TradeIdeas and a bunch of other handles. Facebook.com/TradeIdeasPro is the page to like on Facebook so that you can share everything we post with your friends. Thanks, Andy. Thank you, Steve. Thanks, audience. Have a recording up later on.
All right.
All right.
Thank you.
Thanks.
See you next time.
See you Thursday.
Bye.